You are listening to The Vocal Technologist. Spoken tech for your ears.
Welcome back to Web3 Wednesdays. We're jumping straight into the crypto space today. It's always moving, always surprising.
Absolutely. Never a dull moment.
We're going to try and make sense of some of the biggest moves and maybe some of the most interesting tech popping up. Sound good?
Let's do it.
Okay, so first up, let's unpack these market movements. Ethereum, ETH, has had this, well, incredible run, up 70% since June 1st.
Yeah, and compare that to Bitcoin's 9% in the same period. Quite the difference.
Right. It's pushed that ETH to Bitcoin ratio, the ETH BTC, above 0.037. That's a high we haven't seen, well, projected into 2025 highs already. And get this, roughly $9.4 billion flowing into the U.S. spot ETH ETFs. Plus, you've got digital asset treasuries. They now hold over 2% of all ETH.
And that's up from what, like 0.2% just 2 months ago? That's a tenfold increase in their share.
Exactly. So you add the ETFs and these treasuries together, and they've soaked up 3.7% of all the circulating ETH. What's the real story here? What's this telling us?
Well, what's fascinating, I think, is that these numbers really paint a picture of institutional maturity setting in. You know,
maturity, yeah.
It signals a shift, a pretty critical one, from mostly individuals speculating towards, let's say, more fundamental demand from big players, institutions, ETFs.
Right.
And absorbing that much supply, 3.7%, it's not just about pushing the price up short term. It actually suggests a more structured market is developing, maybe more resilient. It changes the whole risk profile.
A more stable foundation, maybe. Less Wild West.
Potentially, yes. More stable long term. But speaking of wild...
yeah, there's always the wild side, isn't there? We just saw YZY launch his YZY Coin on Solana, pitched as a, quote, concept for a new financial system.
Right, complete with ePay and a YZY Card concept.
And it just exploded, didn't it?
And
market cap shot over $3 billion.
And then, just as quickly, tumbled back down to around $1.5 billion. Classic crypto volatility.
So beyond just, wow, that was fast, what does something like that tell us about how assets get valued in this space? Is it just hype?
Well, it definitely highlights how capital can just flood into something based on, like, cultural buzz or a name, almost totally detached from any real utility or tech.
Right, pure momentum almost.
Exactly. And it's such a sharp contrast to projects focused on, you know, the actual underlying technology, like Boundless's ZK Coin, ZKC.
Okay, ZK Coin, what's that about?
So ZKC is the token for a universal zero-knowledge proving protocol. Zero-knowledge proofs, or ZK, are a way to prove something's true without showing the actual data.
Like proving you're over 18 without showing your driver's license date of birth.
Exactly like that. Super important for privacy and also for scaling blockchains, making them faster and handle more transactions. ZKC uses this thing called proof of verifiable work.
How does that work?
Basically, people who want to generate these ZK proofs, they're called provers, they have to stake ZKC tokens, usually like 10 times the fee for the proof they're generating. They earn rewards if they do it right.
Yeah, but there's a catch.
Yeah, there are penalties. They lose their stake if they fail or try to cheat. It incentivizes good behavior and builds this reliable foundational tech layer. Very different from a celebrity meme coin.
Totally different worlds there. Okay. Foundational tech is crucial, but here's where things get, I think, really interesting looking at the future vision. Coinbase making moves.
Yeah, this pivot towards infrastructure for the AI economy is pretty smart.
Tell us about BUY 402.
Right, so BUY 402 is this open source protocol they're pushing. The idea is for AI applications, even autonomous AI bots, to make payments to each other instantly.
Using stablecoins, right? Not Bitcoin or ETH.
Exactly. Stablecoins are key here. They settle instantly, they're programmable, and they bypass the whole traditional banking system, which is slow and clunky for this kind of microtransaction world AI might need.
So it's moving beyond just trading crypto assets towards actually using crypto rails for payments.
Yeah.
Especially for machines.
Precisely. It's about building practical infrastructure, and actually that connects to gaming too.
How so? Gaming seems like a different beast.
Well, this idea of practical on-chain infrastructure is enabling this concept people are calling hyper-gamblification in gaming.
Hyper-gamblification. Sounds intense.
It is, but it's not like the old play-to-earn models. Remember those? They kind of sucked the fun out and just became jobs.
Yeah, that didn't really last, did it?
No, this is different. It's about weaving speculative mechanics directly into the fun of the game itself, using the blockchain for, instant bets, transparent odds, real ownership of in-game assets that have real value.
So like an arcade, but plugged into Wall Street.
Kind of. That's a good way to put it. An arcade wired into a financial system. Speculation becomes part of the entertainment, and the blockchain makes it seamless and trustworthy. Players are actually invested.
Interesting. But with all this money flying around digitally, security must be a huge concern.
Oh, absolutely paramount. And we are seeing efforts to tackle crime, like TRM Labs' Beacon Network.
Right, I saw Binance, Coinbase, even PayPal and Ripple are joining that. What does it actually do?
It's essentially a collaborative intel network. They share data to flag suspicious crypto addresses in real time. It gives members alerts and tools to help freeze illicit funds before they disappear.
And that's needed, right? The scale of the problem is.
It's huge. Since 2023, estimates are at least $47 billion in crypto sent to addresses linked to fraud. $47 billion.
Wow. Okay, so collaboration is key there.
Definitely. It pools resources against a common enemy. And, thinking about stability in markets, this raises that big question about the 4-year crypto cycle.
Ah, yes, the halving cycles, boom and bust. Will it hold true again heading into, say, 2026? Or is it different this time?
That's the million-dollar question, isn't it? On one hand, these patterns can be self-fulfilling. People expect them, trade based on them. But now we have these massive new factors. We talked about institutional adoption, the ETFs pouring money in, and just the sheer growth of stablecoins. Stablecoin supply is often seen as like fuel for the market.
So these could break the cycle, smooth it out maybe,
Yeah.
or make it even wilder.
Could be any of those, honestly. They could dampen volatility, or maybe extend the rallies, or just fundamentally change the rhythm we've gotten used to. Watching that stablecoin supply is definitely key.
So wrapping this up, what does all this really mean for, for you listening?
I think it shows a space that's just developing at lightning speed. Really diverse stuff happening.
Yeah, from like deep financial infrastructure with ETH and ZK Tech to totally new entertainment models in gaming alongside serious efforts in security.
It's not just isolated trends anymore. It feels like pieces of a new kind of digital future clicking into place.
Definitely. So maybe the thought to leave you with is this. How is this blend, this increasing fusion of finance, AI, gaming, all built on these new rails, how is that going to reshape just our everyday digital lives in the next few years?
Yeah, it's moving beyond just niche crypto stuff now. It's starting to touch everything.
Something to keep an eye on for sure. Thanks for tuning in.
Spoken Tech for your ears.